Namaste traders. Welcome back to the channel. In today's pre-market analysis, we'll look at how Nifty is expected to behave tomorrow based on our well-tested support and resistance zones. These levels are built from historical candle behavior and tail rejections, giving us highly accurate turning points for intraday trading. Let's begin with the structure of the market and then decode the levels one by one. Market overview. Looking at the chart, Nifty closed around 26,175 today. We can clearly see price rejecting higher zones and then pulling back near the baseline. This suggests that the index is currently in a consolidation phase. The important thing for tomorrow is that the market is sitting exactly between an immediate resistance cluster and a support cluster. That means we may get a flat to mildly positive opening with potential trending moves once the first 5-10 minute candles settle. Key levels for tomorrow: resistance zones. Let's talk about the upside first. We have a very clean series of resistance levels stacked on the chart. R1, 26,246. R2, 26,304. R3, 26,362. R4, 26,420. R5, 26,478. R6, 26,536. These levels are extremely important for breakout traders. Bullish scenario. If Nifty opens flat and sustains above R1, 26,246, for 5-10 minutes with volume confirmation, we may see an upside push towards R2 and R3. The real strength will come only above R3, 26,362. A breakout above R3 can take the market quickly towards R4, R5, because there is very little consolidation between those zones. If Nifty reaches R6, 26,536, that will be the extreme top of the day unless there is a major news-driven rally. Key levels for tomorrow's support zones. Now let's look at the downside. S1, 26,081. S2, 25,981. S3, 25,881. S4, 25,791. S5, 25,721. S6, 25,621. Bearish scenario. If Nifty fails to hold the opening range and breaks below S1, 26,081, it can slide towards S2, which is a very reliable support from previous rejections. A break below S2 will open the gates towards S3, where buyers may attempt to defend aggressively. If the market falls deeper, S5 and S6 act as oversold reversal zones useful for contra traders looking for scalping opportunities. Expected market behavior. So based on the overall chart structure, opening expectation, flat to mildly positive. Key bullish trigger, break or sustain above 26,246, R1. Key bearish trigger, break below 26,081, S1. Volatility zone, between 26,081, 26,246. This middle bracket is your no trade or careful trade area. Once price breaks out, the trend gets cleaner. Trading plan for tomorrow, 8:20 9:30. Your focus for the first 10 minutes should be, identify whether Nifty is respecting R1 or breaking it. Check whether sellers are stepping in near S1. Follow trend, don't try to predict reversals inside the resistance cluster or support cluster. Risk management is the key. Keep SL tight and avoid overtrading near the baseline. So this is the complete pre-market plan for tomorrow. These levels have been consistently reliable and precise, so mark them on your chart before the market opens. If you found this analysis valuable, like, share, and subscribe. I'll see you tomorrow for the post-market review.